Hey everyone, thanks for tuning in. Just want to go through the markets, and we appreciate your time. We know it's valuable. So we're going to go through the markets, but one of the things I wanted to point out before we do that is this Dick's Sporting Goods, because this is some pretty interesting action here today. All right, so the stock opened on a blue day or a blue candle. The low price is the open. The stock opened here, got all the way down to there. Let me put in a make it so it's a little bit easier to read because I know you're probably on your phone. But what happened by the close? The buyers overpowered the sellers, pushed it all the way back up, and it actually closed at a higher price than it opened. So today's high was 221.47. We're going to call that 221 and a half. The low was 207. So that's a big reversal. So let's look at the 1 day chart. All right. So this is some bullish action here. I would look at this stock on the long side. I think I might even do it actually. Because it's down on the earnings, and I was looking at the earnings, and the earnings are phenomenal. I don't understand why people sold it. So I'm not surprised at all that we had this big move higher here. All right, let me get rid of that. And is there anything else to this here? Well, just keep in mind that, like, if you look at a candlestick chart, they call this like a hammer or whatever, a sledgehammer. It's pretty easy to see why. But forget the names. Just think about the action. Let's think about this price action. The stock opened here, got all the way down to here, and by the close, it went all the way back to there. So it just shows that the buyers were like, this is ridiculous. This news is not that bad. So we're going to go in and buy. Too many people get too caught up is it this pattern, is it that pattern? It's really just about understanding the supply and demand and psychology. I mean, if done right, that's what technical analysis is. So as we talked about, when SPY got to this peak that was here before, it hit resistance. So today's action was pretty negative, if you ask me. And the reason why is, see, like, action is something you can't define. It's not quantitative, right? But after a big move down like this, the fact that there's no rebound tells me, the sellers are still aggressive. The buyers aren't coming into the market. I mean, S&P had a big down day yesterday. As a matter of fact, you know what? Let's go look at NVIDIA, because I think that's an even better example. I mean, the action in NVIDIA has been very bearish. So I'm not surprised it went down. And, if you've been following us, and, please tell your friends and subscribe and everything. Right. So massive sell off. No, look at what happened today. So this is almost like the inverse sledgehammer, if there is such a thing. This is the exact opposite of what we just looked at. The stock opened here, got all the way up to here, but by the close, the sellers pushed it all the way down. So NVIDIA posted great numbers. I don't know when it was, last week or whatever, and the stock didn't go up. And unfortunately, I was going through the TV or whatever, cable, which I got to get rid of, but that's a different story. And I put on one of the financial channels, and there's some pundits like, oh well, it's down because it's not the earnings weren't as phenomenally beating the estimates as people expected, which is pretty dumb. It's a silly thing to say, but that's what most people think. They're programmed like that. And as traders, we want to just look at the supply and demand. It's called the crowded trade. I gotta have a little bit of water. Thank you. It's called the crowded trade. It's called buy on the rumor, sell on the news. You've probably heard those expressions. And basically, it's everyone who wants to buy NVIDIA buys it before the earnings, because they think when the earnings come out, it's going to go higher. And when they buy it and then the earnings come out and it doesn't go higher, they look around and they're like, man, what the hell is going on here? I better get out of this. This isn't working the way I thought. So they go to sell, but they have a hard time finding buyers. So the vast majority of the moves in a market are psychology. I mean, let's just And if you don't believe me, just think about this. Why is it that at some point today, NVIDIA was valued at a 113.27, and at another point during the day, it was valued at 104.12. Those are pretty big differences in terms of percentages, right? Why back here was a 130? What's changed? Answer is psychology, investor perceptions. If you want to be a good trader, you got to forget about what they're telling you on the news about why a stock is moving and so forth and so on. There's very few analysts that I actually pay attention to. All right. So anyway, so we looked at SPY, right? Action here to me is bearish. Let's go look at the technology sector. Ooh, look at this, right? So once again, it's the important price levels. So this is the technology sector ETF. It tracks the technology sector. I mean, look at this. This is freaking amazing. I mean, I'm not surprised because I've been doing this probably longer than you. But anyway, where was yesterday's close? Right around 210. Where was today's close? Right around 210. Where were these closes? Where was this open? Where was this close? Where was this resistance? Resistance becomes support because people that sold regret doing so when the price goes higher. And they're like, oh man, I made a mistake. If it gets back to my price, I'm going to buy my shares back. So remorseful sellers placing buy orders here turned resistance into support. Psychology. It has nothing to do with, you know, AI or blah, 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 Again, if you want to be a good trader, and I'm talking like short-term trader, I'm not talking like if you're a long-term buy and hold investor, that's a whole different mindset. And a lot of times people ask me, what's the best investment style? And really the answer is, and it just depends on your personality. Like I'm just not really into analyzing companies. I'm not into reading income statements. I mean, I kind of like it sometimes, but I'm more into this mass psychology. I mean, isn't this phenomenal that this sector had the same valuation in March and then went down here? Let's look at percentages. So what happened here that made it go down 8.2%, right? What happened here that it made it go up 20%? And all of a sudden it's right back down. So anyway, so this is some negative action here. It reversed, but it wasn't able to break through that important 210 level. So this to me is another uh, bearish bearish action, I guess. Generally, after massive moves, there's a little bit of a reversal. If the markets are in good shape. If there isn't a reversal, it tells us that the sellers are still active and the buyers are on the sidelines. All right, so Microsoft toyed with this important support, uh, uh, like here. All right, so support here, support here. Now you tend to get support at former support levels because people that sold here regret doing so, and when it gets back to the level, they start to buy their shares back. But anyway, that support is broken, and that tells us that those buyers are out of the market. They're either done, maybe they canceled. And look at this. This is pretty interesting action here too, right? So opened here, closed there, but notice how it closed lower than yesterday's close. So, you might think I'm getting nitpicky or whatever, but in the institutional trading world, if we're prop traders or day traders, this is what they look at. That wasn't really what I did. I was a different kind of trader. Happy to explain to you what I did if you hit me up at stockjobber.com. But anyway, closed there. Looked like we were going to make a reversal, but by the end of the day, we were back down here. So we opened there, got there, closed there. Below this important level, yesterday's close. So that's some negative action there, right? So looks like there's negative action in NVIDIA. There's negative action in Microsoft. And I guess we'll just take a look at Apple. Yeah, wow, man, damn. That I should get paid for this. But actually I do. No, I'm just kidding. I don't want to sound arrogant. Once you get arrogant, it's over. The market will crush you. But anyway, let's just look at Apple here just before I get going. What level is this blue line? What's the price? 217.50. Now I put this in here probably 2 or 3 weeks ago. All right. And if you're someone who follows me, you know it. I'm not lying. What was today's low trade? 217.48. We're talking about a 200 and some odd dollar stock. And it finds a bottom within pennies of where it found a bottom here and where it found resistance here. So, and then just kind of look up here, right? What was support here? It became resistance here, became support again. So support can become resistance because of buyer's remorse. People bought, gets back up to their level, they can get out of break even, they do so. People sell, the stock goes down, then it goes eventually above their buy price, and they're like, I mean, sorry, their sell price, and they're like, if I could buy it back at the same price I sold it at, I'm going to. You don't need to be a chart guru to see that, right? Resistance becomes support, support becomes resistance, resistance becomes support. And this is some weak action too. So to me, the biggest 3 stocks in the market, Apple, Microsoft, and NVIDIA, the action is weak. I think maybe we get a little bit more consolidation or whatever, but I wouldn't be surprised to see the broader markets go lower. Over the last month or so, it's been the financials and healthcare that have really been bringing the market higher. So financials have kind of cooled off. And we'll just look at healthcare. Yeah, now here's another example of negative action. Here's that old inverse hammer. Wow, this is kind of pretty interesting. This almost makes me think that there might be an error in the chart. And that does happen, not a lot, but anyway, this thing got all the way up to there. So opening trade 156, high trade around 159, 160, and then by when the day was over, it reversed all the way back. So that's some pretty serious negative action there too, right? And this is people that have been selling tech have been going into healthcare and financials. That's why these have been moved higher. The fact that there's such negative action here just shows you the market's just kind of running out of buyers. So I suspect that we're going to go lower. All right, everyone, enough of me ranting away. I will hopefully see you soon.